Oh, the role of capital markets in financial security. Now, my dear chums, let's embark on a sarcastic and humorous journey through the world of finance, where money grows on trees and financial security is as elusive as a unicorn in a suit. But let's not get ahead of ourselves, shall we? We must approach this subject with the utmost sarcasm and humor, as is tradition here at MoneyMirth.
Now, Dr. Walker, Director Shue, our capital markets are the world's gold standard.
First things first, let's define what capital markets are, shall we? Imagine a bustling marketplace, but instead of fruits and vegetables, we have stocks, bonds, and other financial instruments being bought and sold. It's like a giant game of Monopoly, but with real money and real consequences. These capital markets provide a platform for individuals and companies to raise funds and invest their hard-earned cash in hopes of making even more money. It's like a never-ending cycle of greed and ambition, with a sprinkle of hope and despair.
These are welcome trends given the critical role of our capital markets in enabling individuals to obtain good, solid financial security.
Now let's talk about financial security. The sweet dream of having enough money to live comfortably and not worry about bills or unexpected expenses. It's like floating on a cloud made of cash, sipping champagne and laughing at the poor souls who still have to work for a living. But alas, financial security is as elusive as a leprechaun's pot of gold. It's like trying to catch a slippery fish with your bare hands. You think you've got it, but then it slips away, leaving you empty-handed and slightly embarrassed. From a moral point of view, financial security is often seen as a noble goal. We all want to provide for ourselves and our loved ones, don't we? It's like building a fortress to protect ourselves from the harsh realities of life. But from a legal point of view, things can get a bit murky. You see, my friends, some people are willing to do whatever it takes to achieve financial security, even if it means bending or breaking the rules. It's like playing a game of poker, but instead of bluffing, you're committing fraud and insider trading. Naughty, naughty. Now, let's delve into the role of capital markets in this grand quest for financial security. Capital markets, my dear chaps, provide a platform for companies to raise funds by selling shares of their business to investors. It's like a giant crowdfunding campaign, but instead of getting a t-shirt or a thank you note, you get a tiny piece of the company. And if the company does well, your tiny piece can turn into a big, fat, juicy steak. But if the company goes belly up, well, let's just say you'll be dining on ramen noodles for a while. Capital markets also allow individuals to invest their hard-earned money in various financial instruments, like bonds and mutual funds. It's like going to a buffet and having a wide array of options to choose from. You can go for the safe and steady option, like government bonds, or you can take a walk on the wild side and invest in risky startups. It's like a roller coaster ride with ups and downs, twists and turns, and the occasional vomit-inducing drop. Let us not forget the lessons we can learn from the role of capital markets in financial security. Lesson number 1. Diversify, diversify, diversify. Don't put all your eggs in one basket, unless you want to end up with a scrambled mess. Lesson number 2. Do your research and don't blindly follow the herd. Just because everyone is investing in Bitcoin doesn't mean it's a good idea. And lesson number 3. Be prepared for the unexpected. The stock market can be as unpredictable as the weather in London, so always have a rainy day fund to fall back on. The role of capital markets in financial security is a complex and often treacherous journey. It's like sailing on a stormy sea, with waves of opportunity and danger crashing against your ship. But with a bit of wit, a dash of luck and a whole lot of sarcasm, you might just find yourself on the shores of financial security. So grab your life jacket and set sail, my friends, because the adventure awaits.
And in recent years, new investors that began trading and investing in markets have been younger and more racially diverse and have come from lower incomes, more so than prior generations of investors.
The impact of new investors on capital markets. It's like watching a bunch of toddlers trying to navigate a minefield with their piggy banks. Bless their little hearts. They're just so eager to jump into the world of finance and make their mark.
Well, thank you, Congressman. First, I want to say that what you mentioned earlier about a broader participation in the equity market, younger, more diverse population, I think that is indeed a phenomenon to be celebrated.
Now, my friends, Imagine a world where the capital markets are a grand ballroom filled with seasoned investors waltzing gracefully to the tune of profits. And then, in walks a group of new investors, stumbling over their own shoelaces trying to join the dance. It's like watching a bunch of penguins trying to salsa. Hilarious, isn't it? But let's not be too harsh on these newcomers. After all, they bring a fresh perspective and a touch of diversity to the market. They're like the colorful sprinkles on a vanilla cupcake. However, we must also acknowledge that their lack of experience can sometimes lead to, shall we say, interesting outcomes. Take, for example, the recent GameStop saga. Ah yes, the tale of a struggling video game retailer turned into a battleground between Wall Street titans and a group of Reddit warriors. It was like watching a David and Goliath showdown, but with memes and rocket emojis. The new investors, armed with their Robin Hood accounts and a thirst for rebellion, took on the big guys, causing quite the ruckus in the market. One could argue that these new investors were fighting against the unfair practices of the establishment. They were standing up for the little guy, like a modern-day Robin Hood. But from a legal standpoint, well, let's just say the SEC wasn't too thrilled about the whole situation. It was like watching a parent scolding their child for coloring on the walls. Naughty, naughty. My young Padawans, it's admirable to challenge the status quo. One must also be aware of the consequences. The capital markets are a delicate ecosystem, and a single misstep can send shockwaves throughout the entire system. It's like trying to balance a stack of Jenga blocks on a tightrope. One wrong move, and it all comes crashing down. But fear not, my young friend, for there is hope. With proper education and guidance, these new investors can become the next generation of savvy market participants. They just need a bit of guidance, like a lost puppy looking for its way home. We must teach them the importance of due diligence, risk management, and the art of not putting all their eggs in one basket. It's like teaching a teenager how to drive. They may think they know it all, but deep down, they need someone to show them the ropes. The impact of new investors on capital markets is both a blessing and a curse. They bring excitement, diversity, and a fresh perspective, but they also bring a level of unpredictability and risk. It's like adding a pinch of spice to a dish. It can either enhance the flavor or ruin the whole meal. But with proper education and guidance, these new investors can become the heroes of the market, navigating the treacherous waters with finesse and wit. And who knows, maybe one day they'll be the ones waltzing gracefully in the grand ballroom of finance.
And this is why I'm pleased to see the SEC pursue updates to Rule 605, data through the disclosure of order execution information proposal.
Rule 605, how thrilling. I can already feel the excitement bubbling up inside me. Now, for those of you who aren't familiar with Rule 605, let me break it down for you in the simplest terms possible. Imagine you're at a fancy restaurant and you order a steak. Rule 605 is like the waiter who brings you a report card on how well the chef cooked that steak. It's all about execution quality, my friends. Now, the SEC, being the diligent folks they are, have decided that it's time to update Rule 605. They want to expand the scope and content of the information that is disclosed. So instead of just knowing how well your steak was cooked, you'll also get to know the chef's favorite color, their shoe size, and maybe even their astrological sign. Because you know that's what we all really care about when it comes to our investments.
However, currently, only market centers like national security exchanges, over-the-counter market makers, and alternative trading systems are required to produce publicly available monthly execution quality reports.
But wait, there's more. Currently, only certain market centers are required to produce these monthly execution quality reports. But the SEC wants to change that.
To your question about the 605, this data was, adopted in 2000, and for the 20 years or so, it's been providing valuable information to the market. And currently, we are trying to expand the coverage of Rule 605, as well as adding to the granularity of this data set.
They want everyone to join the party and start sharing their execution quality data. It's like a big, happy family reunion, where everyone gets to show off their cooking skills. Aunt Mildred's famous meatloaf, Uncle Bob's secret BBQ sauce recipe, and Cousin Sally's vegan tofu stir-fry.
Wouldn't you agree that if adopted, the proposal would significantly expand the data that is made available to the public about execution quality of equity transitions? Yes or no?
It's a smorgasbord of execution quality, my friends. Now, the SEC believes that these updates will provide the most accurate and up-to-date data available.
If adopted, it will, as to the granularity.
Okay, so you're saying yes.
They want to make sure that regulators and market participants have all the information they need to make informed decisions.
I believe that the comprehensive and accurate data is critical to enabling regulators and market participants to make the most informed decisions.
Because, decisions about investments are just like life and death situations. One wrong move and you could end up bankrupt, living in a cardboard box, eating ramen noodles for the rest of your days. Oh, the horror. But here's the thing, my dear readers. While the SEC may believe that these updates will be the holy grail of execution quality data, not everyone is convinced. Some folks out there think that maybe, just maybe, we should wait until we have the updated Rule 605 data before we start implementing these other proposals. It's like trying to build a house without a solid foundation. Sure, you can slap some walls together and call it a day, but sooner or later, that house is going to come crashing down. And trust me, you don't want to be inside when that happens. It makes sense to wait for the most accurate and comprehensive data before making any big decisions. But from a legal standpoint, well, let's just say that the SEC has the final say. They're the ones in charge, waving their rule-making wand and making things happen.
So that is very important. Using the latest, most available statistics. Many of these decisions financially are life and death decisions, moving up or moving down the economic ladder.
It's like a magical kingdom where the regulators are the kings and queens, and we're all just lowly peasants, hoping for a scrap of execution quality data to sustain us. Updates to Rule 605 may not be the most thrilling topic in the world, but they do have their importance. It's all about transparency and making sure that everyone has access to the information they need to make informed decisions. So the next time you order a steak, just remember that there's a whole world of execution quality data behind it. And who knows, maybe one day we'll even get to know the chef's favorite color. Oh, what a time to be alive. Look out for the next video from MoneyMirth. Don't forget to drop us a comment, and most importantly, my friends, subscribe. We appreciate you, and from all of us from MoneyMirth, take care.